All right. Hello, everyone. Welcome to episode 81 of Going Live with Good Soil, where we broadcast this on our YouTube channel for Good Soil Investment. We broadcast it live on there, as well as we are incorporating Twitter Spaces at the same time. Highly encourage other YouTubers to do this more often. I think it's very helpful for Twitter and just for exposure of your channel and so forth as well. So, yeah, Matt, episode 81, the CPI was in line with expectations last week. And, the market didn't really react that day. It was like kind of a dud in terms of volatility. I mean, if you were selling, you know, calls and puts that day, you could have made a lot of money just like selling all the excitement around it and nothing happening, right?
Yeah, definitely. I mean, it's the funny thing about it was you had a negative headline number, I believe, for the first time since the whole inflation thing, kicked off. So that was the expectation. So it wasn't necessarily a big beat. And if you back out the energy and some of the other non-core pieces of it, there still was a modest amount of inflation in the core CPI figure. But the fact that we've got negative CPI at all. And the Fed is still talking about raising rates into that is just crazy to me.
It
It's
is.
like the body's falling, like you've knocked out the boxer, and then they're just
You're
gonna like
still
punch you
punching them
two or
while they're
three more
down,
times. Yeah, it's
kick them
exactly.
while they're down still, even after they're dead, it just doesn't make sense.
Yeah. I mean, give it some time. See, okay, yeah, it looks like what we've done so far cooled down the economy in the way that we wanted to,
Yeah.
or it didn't, and kind of reassess after that. But it's just so strange to me that all these figures are finally coming down. The leading indicators of inflation are really coming down, but even the
Yeah.
lagging ones are coming down now, and they're still talking about raising rates into it. So it just,
Yeah.
yeah, it's crazy to me.
Yeah, and PPI released this Wednesday. Expectation is negative 0.1% month over month. So, I mean, it seems like we're clearly, if that expectation lives in the CPI, it seems like we're heading into a deflationary environment. And can they really increase rates in a deflationary environment? Is that even like, do you think that's like, I mean, do you think that they would do that if there's like 3 months in a row of deflation month over month? And you think they're still going to raise rates if that happens?
I don't think. I mean, I think this next FOMC meeting, which is next week, I believe.
2 weeks, I think. End of
It's in two
February.
weeks.
Yeah,
Okay,
3, or it's at the
or
last day of February, January, first day of February. Yeah.
yeah. So at that next FOMC meeting, whenever that is, I think the expectation is priced at about 100% certainty of a 25 basis point hike, which is
You think that's the
small.
last one?
I think that's the last one.
Mm,
But I mean, it seems kind of strange to me that you'd even be talking about raising rates with everything that we know right now. I mean, keep it flat, get a couple more months of data and then see what to do. But
yeah,
I don't know. To me, it's the whole Fed thing is just laughably backward looking at this point.
yeah,
And
yeah.
there's a lesser known data point, but it may be a leading indicator for January. Is they have this, Empire State Manufacturing Index, which is, one of the it's just one of many kind of manufacturing focused indices. It was forecast to come in at minus 7.0, and it came in at minus 32.9%, or minus 32.9. It's an index, so not a percent,
Mhm.
this morning. So it's just,
Wow.
it's signaling a very sharp contraction in like factory output, at least in New York. So, it's
Yeah.
anecdotal, but to me, all the anecdotal evidence is pointing towards deflation right now. And so to kind of keep fighting the inflation boogeyman just seems wrongheaded.
Yeah, absolutely. I mean, you heard it here first, folks. Inflation is dead. Good Soil episode number 81. We put a flag, a stake in inflation. It's dead. No one else seems to really seem confident, but I am feeling very confident. I think Matt is increasing. I don't know if he's as confident as I am, but I'm feeling very confident. Inflation is dead. So just the data takes time to show it, and these month over month metrics are the closest thing we have to the nearest time data we have. I think that's what we need to be looking at the most. But the Fed is looking at some of these annualized inflation rates or something, which, anyway, it's just how fast are we going to enter deflation? And, ARK investment, Kathy Wood's been preaching that for a while. And I believe that we're on the cusp of a deflationary environment. So we'll see. But most people listen to us about Tesla, right? I mean, Tesla's the big name we want to talk about. We study that. We spend most of our waking, breathing hours thinking, analyzing, studying Tesla. Me and you, Matt, and many of the people who follow us, we're all obsessed with Tesla. I have been for 10 plus years now. I did put a tweet out that Roblox is another stock we follow, is surging. I guess the street likes their monthly metrics numbers. We can talk about that later too. But Tesla, I mean, the big news is these price drops, the price cuts. I mean, insane. I mean, they're cutting the price probably for the, I mean, some of those stuff, like what is the Model 3 got cut by like 3 or 4,000, but the Model Y long range, which is their highest selling, most popular car, got cut by like what, 13,000 or something like that.
Yeah, it was a 20% drop.
Yeah, 20%. Then you add the 7,500. It's like a 30% drop, really, when you add this. So, but the Tesla is cutting themselves 20%. So, like $13,000 off their highest. So, let's just extrapolate on average, like $10,000 per car on average that they, some people are going to get the Model 3, which only had a 4,000 price drop. A lot of people are going to get the Model Y, 13,000. Let's just say it's 10,000. If they're selling 400,000 cars, let's say they're selling 200,000 cars in the US, okay? Best case, let's say, I don't know, 200,000, maybe 150. That would be like 1.5 to $2 billion of just cash giving away, in a way, don't you think? I mean, if there's 150,000 to 200,000 cars in the US being sold in the quarter after a $10,000 loss in price because demand didn't support the higher price point. So many people say it's not, Tesla doesn't have a demand. Of course they have a demand issue. They would not cut the price if there was not a demand issue at this current time. So if they didn't need to cut the price, they would have had an extra 1.5 to $2 billion in their pocket, but they had to cut the price to get to sell as many cars as they can produce in the US, right? I mean, is that math correct, Matt? Am I missing something?
Yeah, I mean, the absolute dollar value of the math isn't wrong. So yeah, I mean, if demand truly was unlimited, which seemed to be the case a year ago, and which a lot of people are even saying now, that it strikes me as totally bizarre that, like you're saying, that some bulls out there are saying Tesla doesn't have a demand issue. Because if they didn't have a demand issue, then they would not have cut prices. It's like
Economics 101.
It's so big, and Elon has even confirmed this. So even if you just don't believe us, I mean, Elon has said it. So follow the cult leader, if not us.
Yeah.
But it's just, I mean, very clearly they did not have enough demand at those price points to fulfill their need. Now, is that catastrophic news? And is the stock going to get cut in half? No. I mean, and I've been spending a lot of time kind of digging into this, but it's very clear that they couldn't even maintain their current level of orders at the previous price points. This back in Q2, I think it was when they really had that crazy backlog and they raised prices. Maybe it was Q1. I think it was Q2. But they raised prices, and then the backlogs just started getting whittled down, and to the point in late Q4 where it was basically gone, the worldwide backlog. And so I think what that showed you is that the price increases that they had in effect for 6 to 9 months, there was never a sustainable order rate at those prices. Otherwise, the backlog would have just kept growing. And so, I think they raised prices in order to kind of chew through the backlog. And now that they've cleared it out and they've got more production coming online, very clearly they needed to lower prices in order to sustain delivery volumes. So, it's not a good thing on the surface, as in, like, to your point, if there was unlimited demand, they'd have like $1 billion more in the US, probably more than that worldwide this year.
Yeah.
But it is a good thing in my mind, because in the real world, you do need to cut prices in order to, it kind of advance or just to sell the product.
Yeah. I put a tweet out, my big complaint. I mean, in the real world also, big companies do some type of advertising, and Tesla has always been kind of above that, from on a moral high ground, I would say, or something, or out of principle or something from Elon. And, I've been a fan of that for up till now. I think giving away 1.5 to $2 billion of profit per quarter is not necessary. They could have put $100 million, they could have put 5 or 10% of that amount of money into traditional advertising commercials, just to educate, not to like trick or market. There's so much semantics around advertising. It seems like sneaky and, tricking consumers and just trying to sell, popular people, influencers using it or whatever. But maybe they just put out sort of like those infomercial commercials, that's not like that, where you're just saying, look, Tesla is the safest car, despite what you see in the media. Tesla is cost effective. You don't have to go to gas stations or change oil ever. And charging is not as difficult as you might think. You can just charge at home every night and have 300 miles every morning when you wake up. Like if they just put those 3 points out and like some simple advertisements, like infomercials, like to the public, like if they do that, I think that'll do a ton for demand in, long term, medium term, long term, whatever, but medium term, they would not have needed to, basically sacrifice $2 billion of margin per quarter for the next few quarters if they had just put these commercials out. In my opinion, I think it's worth
Yeah.
testing an A/B test or something at least.
I completely agree. I mean, the fact that they didn't even dip their toe into that's what, I find particularly upsetting. I mean,
Yeah.
we don't
Yeah.
need to go like full on, crazy like traditional auto OEM marketing budget and like do Super Bowl ads. But you saw
Yeah.
how effective the Super Bowl ads were for Tesla last year when all the other
Yeah.
companies, it was like
Yeah.
there was a direct translation to their order book.
Yeah.
So why not try, spending $20 million, like you said, just to educate and because we're still so early on in the adoption curve, and still so many people that I
Yeah.
talk to who aren't in this bubble think, oh, you can't drive, long road trips in EVs.
They're not safe. They're not safe. They burn up in fires or something. Yeah.
Exactly. So there's just so much misunderstanding about the ownership experience that there's some really low hanging fruit that like a really well put together 30-second like if you had 5 different 30-second things that would just be like a guy talking to his neighbor about like, oh, aren't EVs like, isn't it awful to be charging at a public station all the time? He's like, well, no, isn't it awful to go charging at a gas station all the time?
Yeah.
Just like a little back and forth with that. So like, people
that'd be a
thinking
great
like
idea.
the same thing on the maintenance, like do the same thing on the safety. There's so many highlights that people just are not aware of. And it seems like low hanging fruit that
Very
Tesla
low
really
hanging.
could try, and if they try it and it doesn't work, great, we learned something. But if they try it and it works, then okay, maybe you don't have to lower prices so much.
Yeah, you don't have to sacrifice $2 billion a quarter, $5 to $10 billion of profit this year. Like basically they're just giving away $5 to $10 billion because they don't want to advertise. That's how I see it.
Yeah. So I mean, it's got such a strong brand name too. I think it really would be like the Apple advertisements when that used to be a big thing in like the 2000s with all like the dancing with like the iPod and all that. I mean, those were really great commercials, and I think
Those weren't really like
could
those
do the
weren't
same.
like Tesla doesn't need to do with that. Those weren't like really infomercial commercials. Those are just like kind of branded, like kind of cool, slick. I mean, I like that. That's true. But Tesla doesn't need to go there. I think Tesla just needs to inform the public. In our bubble, everyone watching this in our bubbles, we all know Tesla. There's so many people you talk to, and Uber drivers, were commenting on my Twitter thread about that, saying like, yeah, I drive my Tesla Uber all the time. When I pick people up, they have no idea what the heck's going on. They think it's unsafe. They think it's hard to charge. I have to educate everyone. Like half the people he picks up, he has to try to educate them on what's going on. So you get some of that. We're doing the best we can as early adopters of Tesla, but we can only spread the word so quickly, amongst ourselves with our family and our networks. It's not fast enough to keep up with the growing production capacity in this recessionary environment for Tesla to meet its, for demand to meet its growing production capacity. So I think just some traditional advertising would go a long way. Like you said, low hanging fruit. It seems absurd that they don't try it to me in the US, like, at this point, Nick, maybe 5 years ago when they were getting ready for the Model 3, or they're tiny and it costs a lot of money, but they have all this money in the, instead of doing a $10 billion buyback, they could do $100 million of advertising and give a $9 billion share buyback, and they wouldn't have to lower prices, and we'd have a buyback too. So basically, we're sacrificing a lot. As a business owner of Tesla, which all of us shareholders are. We all can opine on this stuff. And to me, I think like Elon in his head, he's principled and he sees the big long-term picture, the end justifies the means in terms of business or whatever. And he wants to give the price break to the consumers, blah, blah, blah. Like Tesla will be great in the long term, no matter what, kind of thing. But, I disagree. And maybe he also maybe the idea of like doing case studies on Tesla in the future, like, hey, you could be a great business and never have to do advertising. Like what a case study that would be, like, so I just don't like it. I think they should try traditional advertising. It would just help the general public perception, and grow adoption faster. I mean, advanced sustainable transport, accelerate a sustainable transport is the mission, right? Don't you think
Yeah.
some traditional advertising would accelerate it? I think so.
Yeah. So, I mean, on the flip side of this, though, I mean, if you're GM or Ford or Toyota and you've got to
Yeah.
compete against the Model Y and the Model 3 at these prices, especially in the US with the incentives on top of that,
Yeah. Yeah.
like,
They're
oh
in
my
trouble.
gosh, like,
Yeah.
so from a competitive standpoint, boy, does it put the pressure on those other guys.
That is true. That is
So,
true.
so to me, it seems like they have secured their ability to, deliver as many cars as they can produce, at least for 2023 with this
Mhm.
pricing. So that part of it, I think is good, but maybe it didn't need to be quite so painful on margins in the short term. But I don't know. I
Yeah.
mean, have you thought about the competitive dynamics now and how that changes with like if you're trying to buy a crossover and you got to compare, like as far as I'd put a couple tables out, I don't have them right in front of me, but like a RAV4 ICE versus a Model Y, like, isn't the math just so much easier now?
I do think the demand just from the price, the organic demand increase from a price cut is very substantial. When you see I saw some analysis that says like, the end of December after she had that initial price cut, for the last like 10 days of December, the price now when you include the Inflation Reductionary Act with that price cut is 20% lower than it was at the end of December, or now you could say it's like 30% lower than it was before the price cut. So when you do the math, I think there's like demand does not increase proportionally to the price. Like some might speculate, oh, well, that means demand went up 30%, or I saw someone say like demand should be about double, maybe that, so 60%. I think demand might go up 100% plus just from the $30,000 price cut, or the 30% price
Yeah.
cut, the $20,000 price cut. The 30% price cut, I could see demand being 100%. The sustainable demand, given like the current economic environment, say that assuming that stays the same, would be 100% more. And so that demand is taken from the competitors, like you said,
Hmm.
GM, and then it's also taken from not just the EV offerings, but obviously the internal combustion engine offerings at those price points. So demand might even be 200% or 300% increase, just from a $20,000 price cut. It's hard to say, but I'd say it's a lot more than 20% increase in demand from a
Yeah.
20% price cut. I mean,
So I
yeah.
remember this old rule of thumb, which might be dated right now, and it's possible I have it slightly mixed up, but it was something to the effect of for every $10,000 you drop in a vehicle market segment, so from 40 to 30 or 30 to
Hmm.
20, you double the addressable market within that segment, which makes
Yeah.
sense because obviously the market for a $25,000 like base version. Probably 25,000 is too low now, but like a Camry or whatever, Camry or Accord, like the most popular selling cars that are $30,000 is I don't know how much larger, but drastically larger than the market for like a $50,000 BMW whatever of a similar size. Yeah, if you drop by $20,000, maybe you 5x or 4x, or maybe it's just 2x the market, but very significant increase in overall demand. And the other thing that I think, to the point we were saying earlier about just the overall market education, is people still I don't think appreciate the total cost of ownership difference between the EVs and ICE vehicles. So people are still comparing sticker price, but you're not changing oil. The fuel cost is like a third of what it
Yeah.
is for gasoline. And
Yeah.
so yeah, it's just there's
Charging at
it's
home every
more
night,
than just the
convenience.
sticker. Yeah.
Yeah. Yeah, I agree. And a little bit of traditional advertising, I think, would go a long way for that. So and what's interesting is, do you think in the US that GM is gonna have to lower the price of the Mach E, for example, now? Or do you think they're gonna keep the same price, or what?
Well, I'm not sure what their production is. I mean, because if they're like 10,000 units a year or something like that, then they probably don't need to cut prices to keep selling that few. But if
Yeah.
they have ambitions to get to, Model Y types of sales figures, then of course they're going to have to cut. It would have to be priced a lot cheaper than a Model Y, I think, in order to get to those comparable levels. And they're
Yeah.
not going to be profitable doing that. So, I kind of think that they're going to stay with the production targets that they have.
Yeah.
And as long as, yeah, go ahead.
I was going to say Raymond Chan mentioned, which I was going to bring up to you, that in China, the competitors like XPeng just lowered their price by like $5,000 or $6,000 for their main car. So, do you think it seems like the Chinese competitors might be moving to lower their price to kind of keep up with Tesla, which seems like impossible for them? I mean, don't you think they're going to be? I would think they're going to be like losing money, those Chinese competitors, but maybe they have no choice because they've already been building up this inventory. If they don't lower price, they just won't get the demand to sell the car, and then they're screwed more than selling it at a small loss, right? I mean, so I'm wondering if GM and Ford are going to have to do something similar and Volkswagen are going to have to do something similar and just lower the price, even though they're going to lose money now or more money.
Yeah. So the Chinese market is way more competitive than the US market right now.
Yeah.
There were a bunch of new models released in the last 6 months or so. So that, dynamic is really aggressive right now. Much more so than in the United States. So I think it might be a race to the bottom more so in China in terms of gross margins for all these players than it will be for in the US market. Because I think like China might have 50%. I saw somewhere somebody said that China might have 50% EV sales this year. That sounds too aggressive to me, but call it
50%, no way. Yeah, that seems
that's
low.
what I thought. So I think there was somebody that had a market forecast of saying 2025 they'd get to 50% market share, which like that's still pretty aggressive. But since some other market commentator said that it would happen this year, but let's just say 2025, for example, that's way faster than is going to happen in the United States. So it's a much different overall environment.
Absolutely. All right. So, I mean, the cost of goods services is going to decrease, obviously, as they ramp up. I mean, and we're back to kind of a deflationary environment, it seems like, for commodities and chips, perhaps, and all that. I mean, Giga Berlin and Austin are ramping up, so they should be getting more efficient. Have you modeled out, or have you speculated on the cost of goods sold, what those decreases might be like, or how they could help offset the price decrease?
Yeah, so I've been looking at it in detail, and it's kind of tricky because we're looking at what's going to happen in Q1, but we still don't have the Q4 data yet. We'll have that next week, obviously, after the earnings call. But there are a lot of things that I think are going to be tailwinds in terms of reducing cost of goods sold. So the biggest one probably is the raw material cost decreases that have been coming down for the last 6 to 12 months, kind of depending on which commodity you're looking at. But steel, aluminum, lithium carbonate's a really big one, which has really been decreasing lately. And all these prices are coming down, so that's going to lower the cost of goods sold across the board. But then on top of that, you've got higher throughput in Shanghai in particular, because that was, in Q3, which is our last data point. They were in the middle of that ramp, so we didn't have a full quarter of the higher production volume to kind of flow through the cost of goods sold. So that will help too. And then obviously Berlin and Austin ramping. Those were definitely dragging down overall gross margins. And so you've got all these factors kind of coming together, plus continued improvements within the factories, like all the giga castings which have been worked on right now, and all these other kind of continuous improvement practices which Tesla puts in place. So I think it's fair to assume that there's going to be at least $2,000 of cost of goods sold savings. But it's so hard to say exactly when these savings would kind of change through or adjust. So the math that I've been doing is it's still very much up in the air, like I was saying, but you're taking prices down. Maybe it's an average of 10% worldwide, something like that. And your cost of goods sold is going to come down some amount less than that. So you'll have margin pressure a little bit. I think the kind of range that I think is likely to see the gross margin decrease, I think it's probably 2.5% to 5%. I think 5% is probably on the high end. So, if you're talking about going from the high 20s, so like 28, 29% in recent quarters to, like the mid 20s, 22, 23 or something like that. Possibly even staying in the 25% range, depending on,
That'd be great.
cost of goods sold. Yeah, which would be a huge win. It's just been funny, like looking at, because my gut reaction when these price cuts came out was, oh man, this is going to absolutely destroy margin. And my thinking was, okay, you've got roughly 15,000 of margin per car, less than that, a little bit less than that maybe, and you're going to cut prices by $5,000 to $10,000. It's like, oh, that's like a third of your profits gone. But when you actually do the math, so a lot of people were thinking, okay, gross margins in the teens, and that was kind of where my head went at first. Was just like, 15, 16, 18% gross margin, something like that for all of 2023. That was just my gut take. But then when I started actually modeling it out, and I always try to be middle of the road with these numbers, it was not nearly that drastic. Which was a surprise to me. And you've seen some Tesla Q folks. There's this one guy who his math was, he took the 25% auto gross margin and said, okay, there's a 15% price cut. So that means that gross margins are going to be 10% going forward. I'm just like, that is not how that math works at all. So I think there's a lot of a lot of Tesla Q are just like rubbing their hands like, this is it. Like the moment I've finally been waiting for, like Tesla to go bankrupt.
Yeah. Meanwhile, the stock is ripping now. 130 we've broken. Seems again, maybe the second time for today. Maybe we'll stay above it this time. 130.26 as we talk. So it's a good day. Finally, we're talking on another day where the stock is actually recovering and coming up. So 130 is still super low. Yeah. We're close to 30% higher than the low. Isn't that kind of crazy when you think about it that way? Like the low was like what, 101 or 102 just a couple weeks ago or a week or two ago. And now we're at 130. So it's like 30% higher and like pretty quickly. I feel like that the lows are in. I don't know. I don't feel like we're going to go dip below 100 now. It feels like hard to fathom at this point, from just trading perspective.
I agree. I mean, I think at this point it would take, Drew Dixon made this point, and I agree with him. I think it would take fundamental misses from Tesla to make the lows go lower. So if
their Q4 margins were like way below everyone's estimate. Maybe, right?
You can imagine like if their Q4 margins were like 20%, 22%, and then they had to cut prices on top of that, like, oh man, that'd be a huge red flag. So in that case, I could absolutely see prices going down, but I think that's really unlikely.
Well, we got to do next Tuesday. We can do kind of your quarterly model preview on.
Sure. We should definitely do that
to walk through it the day before earnings. Yeah. So, anyway, I mean, also the other news is Elon Musk, right? I mean, I guess he's going on trial starting today in San Francisco here, like with the taking Twitter private. Taking Tesla private tweet he put out a few years ago. This seems so silly that this has gone this far to like what shareholders are taking him to court over this? Obviously it's really short sellers. It's like,
it's funded by the lawyers. Yeah.
It's funded by the lawyers who are probably incentivized by, just getting money. And I would think no one should be upset about it. No long-term, no right-minded. If you're a short-term speculator, maybe you were upset somehow. I don't know. But if you're an investor in Tesla and you're, investor means like long-term in my mind, if most general public, I would think, thinks of an investor as someone who owns the stock for more than a few years, you're an investor. You're not just some like short-term speculator. So if you're an investor, you're doing great. If Tesla had come back down, never came back up to 420 again, okay, maybe there's a case to be made somehow. Like you bought it on the way up at 400 and thought it was going to go up beyond, and now it's back at 200. But now split adjusted, it's like $2,000 a share. Why would you be upset that he's thinking about? You should be happy that he didn't actually take it private. It's it doesn't make sense to me. I mean, do you have any thoughts about this trial right now? Do you think it's a risk?
Yeah, so I haven't been following it too closely. I do think it could be a risk. I don't know the numbers on this, but somebody was saying, if he loses and has to pay damages, he could have to sell more shares, and so there could be that whole debacle. I don't get the sense that it would be that much of like a negative stock impact. But just overall, I completely agree with you. It's like
The
this.
plaintiff owns 8 shares, according to Raymond Chen on the Twitter. I don't know if anyone else has more information in the comments.
Yeah. Well, I heard that. I heard it was like 3 shares pre-split or something like that. So
Ugh.
maybe 8 now. It just so it's so ridiculous. It's very clearly not in this guy's best interest to be going through this. But there's all these lawyer fees involved, and so people have incentive to go through this. But it's
Yeah.
not it's not at all.
And they
for
want
the
a
benefit of
settlement. They obviously
shareholders.
want a settlement. I don't think they can. They want a settlement, right? I mean, the lawyers would love Elon just to say, okay, I'll pay 100 million to make this go away. Here's your cut, and the lawyers get 50 million of that or whatever, right?
Yeah, exactly. And so I think he's going to try to fight against this. He's been
I
really
think so.
successful at doing that in the past.
Yeah.
Especially we've seen how passionate he gets on this topic in particular, because he did have the funding secured, at least in his mind, with the Saudis. And then the SEC came kind of and really backed him into a corner. And so this is a really emotional topic for Elon. So I think he's gonna like fight this just on the principles. So I hope he wins, but we'll see what happens. Do you think it's a risk? What are your kind of thoughts on how it might impact?
I actually think it's close to zero risk, because it's there's a jury deciding on
even
this.
in San Francisco, though, because that was the one thing where he was trying to get out of there.
Yeah. No, even in San Francisco, it's harder to pick a balanced jury, obviously, in San Francisco. That's like so highly, left leaning, and the left hates Elon right now, obviously. So, but I think you'll find people, and I think they've selected a jury. That was probably the most important part of this trial, is selecting the jury. And there's even like articles written about the selecting of the jury or something. and I think everyone knows, as long as there's a couple of people in that jury that are sensible, then I don't think, in my mind, sensible, sure, I think more than half the jury would be sensible, to be honest, even in San Francisco. But I think as long as there's at least a couple people that are like, this is ridiculous. How is this? We can't prosecute Elon. This is terrible. Then he gets out of it. It's just a pain in the butt for him to have to show up and testify on Wednesday and all this stuff. And I think he's okay with that. So I think that's what's going to happen. It'll be just a jury of peers that are informed by both sides, not by the media. And when they get both sides information, they'll make sensible, logical conclusion that this is a ridiculous case to bring forward, and it's throw it out. Be like, get rid of this, and then hopefully the lawyers learn. Let's not try to do these types of lawsuits against Elon, because he fights him and wins.
Yeah. Well, I mean, if they keep getting paid, even if they lose, I don't know.
Or do they get paid if they lose? I don't think they do.
Well,
I think a lot of these lawyers just automatically, maybe someone's funding them to do it.
Yeah, that could be the case. So I don't know. I mean, this is a bit of speculation, but I think most lawyers wouldn't do this, just on the betting on the come, essentially, that they can win and get some huge payday, and if they lose, they get nothing. I'd imagine there are some people who are kind of funding this legal effort.
131 just broken, by the way. 131 broken, going up. All right, I like this. This is a nice trend.
I like it, but I'm a long way from celebrating. I say that.
Well, me too. As long as we're just going in the right direction, I feel like my blood pressure is lower. So just keep my blood pressure low, please. All right. Anything else, Elon, we wanted to talk about, or anything else Tesla we want to talk about before we kind of move on, Matt? Anything you think of?
I'm just looking through the outline. No, I don't think so. I mean, the only other thing that we had on our list was the FSD beta V11. So this was the single stack. Elon, I was looking at some old tweets. Elon was actually promising this in February of last year, and then it just kept getting delayed. And then in December, he said it'd be 2 weeks. And so then I think in January, was it like 2 weeks ago, he said it'd be maybe 2 weeks. So maybe like 3 weeks from now, we might actually have it. I don't know.
Yeah.
I was trying to think today.
One thing I noticed, remember he made that comment in his tweet about like the neural nets will be affecting other controls or something?
Yeah. Like navigation and stuff too.
Yeah. One thing it might have done too is I noticed it this morning. Like I had just coming back from a trip over the weekend, a long road trip over the weekend. I was driving, and I think on the radio we just had like, I was driving back last night with my kids in the car. They were like watching something in the screen in the back, which is kind of cool for the road trips. They're watching some like Disney show or something, and I didn't have any like anything on. Like anyway, I was listening to music earlier in the front and all that. Anyway, this morning I get in to take the kids to school, and as soon as I get in, not only does the school show us like the first option to select, which has been going on for a while, which is nice. I don't have to like pull up, write the name just to see what the traffic's going to be like going there and stuff. But also, it automatically, for the first time I noticed this, it automatically set the media, the sound, to what I normally listen to when I'm taking them to school, which is CNBC or Bloomberg. I think it put it on CNBC because I'm always in tune in CNBC and Bloomberg, and I'm switching between the two while I'm taking the kids to school, just to kind of listen to that while I'm talking to my kids and stuff, or have them kind of listen to the news, with me. But yeah, it automatically set the radio to the station I usually like to listen to going to school, which is, I don't know if that's neural network or what, but somehow it knew that, and it's the first time I noticed that.
Yeah, so I haven't noticed that. I haven't been driving a whole lot lately, though. To be honest with you, I've been holed up at the home office for the most part. But I do think this has been such a long time in the making, and this isn't. So this is the first time the public's going to get this V11, but he called it like V11.4 or something like that.
Yeah.
So there must have been several major overwrites of this stuff, and they just said, you know what, we can't release this. Like it's much more important to get the releases right than to get the releases out fast. Because if you've got one bad accident that changes public opinion, it's just it could be a total disaster for the whole company. So
like that Thanksgiving Day one, like that was sort of, everyone has been highlighting that happened, the day after. You saw that video of that car kind of slowing down in the San Francisco Bay Bridge tunnel there.
I don't know that I did see that one, actually.
It was like a phantom braking accident, claimed as a phantom braking, where the car like suddenly slowed down, caused like an 8-car pileup, and a few people got injured. It was on like Thanksgiving Day, like the day after or the day before. Elon said, "Yeah, we released a new version. It's even better now," or something. Everyone's making a big deal about this accident.
Yeah. So I mean, Elon made a comment recently that the pace of improvement of their AI systems is actually really accelerating right now, and so. Yeah, it's been ridiculously slow so far to get these updates, but the V11 is such a core rewrite of just about everything that once this goes, I really do think we're going to start to see a really improved pace of improvement in the actual driving experience. So I really can't wait to see this and see what it's capable of doing.
So this is like the single stack. This is like supposed to be the single stack version event that we finally get, that we've been talking about for over a year now.
Yeah, with actually smart summon, maybe I don't know if they'll actually include that or not, but the logic of doing the whole kind of single stack rewrite it's a really big undertaking, obviously, because it's got to be comparable to or better than the old stack, which had been optimized over many years before it really makes sense to release it. So I'm just very excited for this, because I do think we're going to, like, the improvements that we saw over the course of 2022 were pretty good, but I think the improvements that we're going to see in 23 and beyond are going to be like very like accelerated.
Yeah, I agree. We'll see. I mean, maybe they want to release this before the 25th, before the Q4 shareholder call, so they can put it in the shareholder letter, like version 11 just released and XYZ about it, because I feel like they're not going to want to talk about it in the shareholder letter, the conference call, opening remarks, or anything if they haven't actually released it yet. I don't think so. Definitely released before Investor Day, March 1st. I mean, you got to think that self-driving technology is going to be talked about as part of the Investor Day. So it's coming up. It's coming soon. I just see a headline from Reuters: jury selection begins in Tesla shareholder case over Musk's 2018. So I guess the jury selection is beginning today. So yeah, that's going to be the key element of the just get some sensible people on that jury, I think. So anyway, let's go to Q&A, I guess, unless there's something else. Well, Starship, SpaceX, a lot of people, that's on our list here too. We're SpaceX fans and Rocket Lab fans, which is doing well today. It's so funny how Rocket Lab just gets ignored by so many people talking about the space industry. I don't understand that. They can't be ignored forever. They're doing great things, sending things to orbit, so much. So it's just, but Starship's doing some good stuff, right? I mean, they're gonna have like 4 of these built by the end of the year or something, I think Elon said.
Yeah, and they've got they finally stacked them, so the booster with the Starship on top of it. It's just ridiculous. If you guys haven't seen those pictures, definitely check them out. This thing is so massive. I can't imagine what it would be like to see this actually launch. Just given how massive this is and all the engines, like these Raptor engines that they have are just just insane. So
Imagine if
they're not the
something goes
Raptor. What are
wrong,
they
but
called?
imagine if something goes wrong with the Starship and it blows up in the middle of the how crazy that would look. I mean, it'd be like freaking major. That would be insane. I
Yeah.
mean, if there's a blow up of the star, it's almost like watching the to me, it's almost like watching I mean, I definitely not with any astronauts on board. I don't want to see any blow ups, but it's almost like watching NASCAR or race car. Like I really don't care watching it, but I do kind of want to see the crashes, And so all these over and over like starships. I mean, I'm a SpaceX investor. I don't want to see a crash, but just like it would be kind of like really weird to see like a starship blow up in the middle of the flight. I mean, if it does blow up, I hope it's one of these first test flights and not one later on when there's a humans on board and stuff. So I wonder
Yeah.
if we'll see some kind of big accident of the starship before
Well,
they
there was
iron out
at
the
least
kinks.
the one where they were doing like the short hop where it went up, I don't know, five
Yeah.
kilometers or however high it went, and then they were trying the kind of landing maneuver, and it just kind of barely didn't make it, and then blew up. But like
Yeah.
that, you have to imagine that was not fueled to the brim or
Yeah.
anything like that. So if you had one like blowing up shortly after launch, oh my
Oh my
gosh, I
gosh.
can't imagine
Yeah.
what that would look like.
I mean, they're gonna
Um,
have all the safety precautions in these first several, all of them, but especially this first one. So it would just be magnanimous to look at, like spectacular, not in a good way, but it would be something you'd
yeah.
remember, a vision you'd always remember. But I doubt there'd be any deaths. I don't think there should be any deaths based on the
Yeah.
safety precautions. It would just be like crazy to look at. So
Yeah, no, I agree. And they also had this Falcon Heavy launch. Was it yesterday or a couple days ago? And that's an interesting one to me because Falcon Heavy is this weird interim rocket where they were planning to use it for going to the moon and beyond, and they
yeah.
ended up developing it. And then like, you know what? It's not fully reusable. Let's just kind of skip it. So there's probably only going to be like a couple dozen launches ever of this. So it's kind of cool to see these
Mm.
because it's going to
Falcon
it's going to
Heavy.
become obsolete pretty much as soon as Starship is reliable.
Oh yeah. Yeah. Everything else for SpaceX will be obsolete basically once Starship's up. Yeah.
Yeah.
That's going to
So
be
so
their
the
bread
double
and
booster
butter.
landing though, like I'll miss the double booster landing because that's crazy.
Yeah. Yeah, that would be kinda cool to see again. I mean, the first time that happened, that was, like, really something you remember, a sight you remember too,
Oh my gosh. Yeah.
Yeah.
Yep.
And
Anyway,
Rocket
yeah.
Lab's about to launch their first, I think later this month or next month is their first rocket from their Wallops, Virginia,
Yep.
launch site, right? That's a big
Yeah,
deal.
they were gonna launch last month, I believe, but they had some weather issues. Never got a clear window to attempt to launch. So yeah, this will be their first US based launch. So that's a huge milestone. I mean, they've got 3 launch pads now.
Yeah.
So it's a very big deal.
Yeah. And one more thing, another stock we cover often or we talk about and is Roblox. They had some, I guess the street is very impressed with their monthly metrics. They just reported early this morning for December. So the stock's up, 13%. Still way off from its 52-week or from its all-time high as all the growth tech stocks are. But, I think the proof is in the pudding with Roblox, whether it's a trend or a fad, like does it die
Yeah.
down or does it continue to trend upwards? And, you know, I believe it's going to continue to trend in the right direction just because that self-fulfilling loop of that they're so far ahead on that no one else has really in terms of the number of developers and good quality developers and developer teams, building new stuff, new experiences on Roblox continuously and attracting more users, more kids, more and older demographics are now using it. That's increasing. So I think they're going to stop doing the monthly metric. They mentioned on their press release this morning that they're going to stop doing the monthly metric reportings on a monthly basis after the March metrics are released April 15th so going forward after that, we'll only see it every quarter. We'll see, I presume they'll still show their monthly metrics in their quarterly reports. So we'll still see the monthly metrics, but it'll just be every 3 months instead of every month. So we'll see
Probably a
how
good
it plays
idea.
out.
'Cause you've had so many double-digit percent moves on Roblox in
Yeah.
both directions
Yeah.
as a result of these, and so it's just, I mean, that's got to be so distracting for a management team. I think if
It does. They
you're
probably realize
just
that, and they're like,
yeah,
we can't create trading events around every month. It's too much
yeah. That's
distraction.
that's a good point. Yeah.
Yeah.
So anyway, should we go to Q and
Yeah.
A? I know
Let's
we've
go to
gone a bit
Q&A.
over.
Yeah, let's go to Q&A. All right. First question is from Bob Adams, 1414 on Twitter. A large percentage of US Tesla sales are in California. What does Tesla need to do to generate more sales in the rest of the US? Um, I mean, we talked about it a lot earlier. I think traditional advertising would help accelerate the transition to sustainable energy in the states and parts of the country that are not already accelerating in EVs. They're just kind of off to a slow start. The Midwest or the Northeast or wherever, where you don't have a ton of. Another thing to inform the public on is how the all-wheel drive Teslas perform in the snow, in the cold weather. I mean, for some reason, even my mom, it was like a big deal for her to get over like getting rid of her Subaru to get a Tesla Model 3 all-wheel drive. And she lives in Long Island half the year, where there's a lot of snow and stuff. And it was a big deal to like convince her, even though I told her over and over again. It took a while. And then when she finally got it and she got her Model 3, it performs great in the snow. Like I said,
Yeah.
so I think that's just another example. So people in like wintry climates are convinced that they need internal combustion engine all-wheel drive. They have no idea that the all-wheel drive on the Teslas are like digital versus analog, and they're just so much more efficient and better. Like it's so
Yeah.
way better.
The regenerative braking is such a big deal in the snow too. I mean,
Mm,
that's 'cause a lot of times when you're in a big vehicle, a nice vehicle, and you just coast and you hit the brakes a little bit, it'll just start sliding. But with the regenerative braking, it's very easy to get a very clear sense of exactly how in control you are.
yeah,
So yeah, the snow driving is just phenomenal. I mean, my
yeah,
wife drives a huge Expedition 4-wheel drive. It's got like the snow traction setting.
yeah,
My all-wheel drive Model Y without snow tires is way better at like
yeah,
handling the snow than that huge car.
yeah.
You got
And
the
I
lower
had
center
the
of gravity too. It's like all
Yeah,
these
lower
things
center of
make a big
gravity,
difference.
skateboard. Yeah, I
Yeah.
mean, when I had my rear wheel drive Model S back in 2014 in Connecticut, when I lived in Connecticut, and drove through some serious blizzards with that thing performed better than my previous Subaru WRX I had years before that in the
Yeah.
snow. Like I was happy with the Subaru WRX. I was like a boat in the snow, in big like 12-inch snow. Like that's it was cool. But the rear wheel Model S, even that wasn't even, that was before all wheel drive, and that performed better because
Wow.
of the instant digital traction control,
Yeah.
responsiveness. It doesn't take an internal, it could just instantly the torque, the torque
Yeah.
changes. It's just it performs better, even just rear wheel drive. And that was all season, that wasn't even snow tires, and it performed very like even better than the
Yeah.
anyway. Just things like that people need to educate. I see people in the comments talking about advertising, like people making suggestions like Tesla should do something innovative with advertising, get more influencers to compete to create commercials or do something different. I'm not opposed to that. I think they should also put like 100 million or something into traditional, normal, conventional methods of advertising, like that older people that aren't used to like seeing influencers on YouTube. People just watch the nightly news or stuck to watching CNN and Fox News and watching sports on primetime TV that don't even use like Netflix or there's a ton of people like that need to be educated that are still in that kind of you know 20th century mediums. So I feel like you need to educate those people the most, because that they're stuck in the kind of the 20th century technology, a lot of them. Anyway,
Yeah. Yeah.
that's my rift. Next question from Kevin73464253 on Twitter. Tesla's 2023 cash flow from operations is uncertain, with estimates of 15 billion USD in 2022. This makes valuing the company challenging. What do you think? Matt, you want to take a stab at that one?
Yeah, I mean, it all kind of comes down to what we were saying at the kind of top of the show here about margin potential. I mean, EBITDA is a good proxy for cash flow. There's a couple of differences, but for the most part, that's about what you'd be looking at. So the question is just how substantially do margins get hurt as a result of these price drops, and then on the flip side, how much more demand can they deliver as a result of these? So I'd been modeling around 1.8 million units in 2023 before the price drops, but after the magnitude of these really surprised me. To me, it seems more likely that we're going to be closer to 2 million units for this year. What's your thought on that, Emmet? Just before I kind of answer the cash flow piece of it, like what volume is likely to achieve this year?
Yeah, I mean, we touched on this a little bit the other day. I think fourth quarter, I would say my conservative estimate of a volume of deliveries is 550 to 600,000 globally. That's conservative. That's if the recession lingers and is as bad as people think. Maybe despite the price cuts, they'll still get to that and be able to deliver that many. So I think conservative, I would say, maybe 500,000. The other, so like 2.1 is sort of my conservative guess in deliveries for this year. 2 to 2.1, 2 million, because I think it'll be 500,000 plus in Q2 and Q3, and so Q1 is a question mark. I think 450 is sort of like where I'm at for Q1. Based on these price cuts and the volumes, and they produced 440,000 in Q4. So you got to, even though Q1 is a slightly shorter quarter, right? It's a couple days shorter, but it's also Chinese New Year. But then you have to discount,
Yeah.
like, hey, didn't the China plant shut down for a part of December also? But but also then you say, okay, well, there's ramping up still continuing of Berlin and Austin. And so I would think that there's got to be close to 500,000 cars produced in Q1. So if there's still kind of this logistics challenge, I would say there's still got to be at least 450,000 deliveries, maybe. But if the logistics challenges aren't as bad as people fear, I could see 500,000 deliveries in Q1. So that's best case,
Yeah.
but that's my thought. And then the rest of the year, 500,000 plus, and so 2.1 million would seem like
Yeah.
my conservative estimate.
Yeah, so that, I mean, that seems about reasonable. And when I'm doing a couple of different sensitivity analyses on the model that I've got, when I'm looking at 2023, when I go pretty conservative on almost all the assumptions, then I'm getting kind of earnings per share and operating income figures for 2023 that are like roughly flat with 2022. So the bear case, I guess, or not even the bear case, but the bearish take on what would happen if this was a really bad year is, they actually are closer to 1.8 million vehicles delivered this year. Margins are hit a lot worse than I projected. Maybe it is on like the 5% drop in gross margin rather than the 2.5% drop. And then putting all that together, their earnings per share, which I think this year they're going to do something like 415. 410, somewhere in that range when the Q4 numbers come out total for the full year, then maybe 2023 is flat but on higher volumes. So earnings per share doesn't increase because the margins have been hit, and offsetting that a little bit is that the volumes have grown. So that's kind of like the worst case scenario. And so then with operating cash flow, the similar sort of trend would stay true, assuming there's no massive buildup in inventory or something like that, which would be a drag on operating cash flow. Then roughly 15 billion would be a reasonable estimate, I think, on the low end.
Yeah. And I think there's a realistic chance that Tesla delivers 2.3 to 2.5 million cars this year. I mean, I think
Oh, really? 2.5?
that's the optimistic, the most
Okay.
optimistic. I think like my 80% confidence interval is between 2 million and 2.5. That's my 80% confidence interval. I put between how many cars Tesla delivers, not just produces, but delivers in I mean, it wasn't long ago when everyone thought that they were going to deliver 2 million in 2022, right? I mean, it wasn't long ago. Like everyone was like half of the
Yeah.
community a year ago, everyone was thinking, oh, 2 million. Yeah, it should be a lock for this year, So
Yeah, we've been surprised at how slow Berlin and Austin ramp has been for
yeah,
sure. But yeah, I remember
yeah,
we had a long time ago, we had Brian, who I see in the comments, Brian from Next Big Future on, and he was definitely looking at 2 million deliveries in 2022.
yeah,
I remember that from the conversation, and it's it's just so hard to predict these S curve
it
ramps,
is.
and the 4680 clearly has been a lot slower than people were thinking.
Yeah,
So that just played into it too.
yeah. And then the Cybertruck, you know, should be the first deliveries are this year. I mean, I'm probably 80% confident they're not going to push it back into 2024, but it depends on when the first deliveries are going to be, the end of the second quarter, beginning of the third quarter, or the first deliveries are going to be like sometime in the fourth quarter, and then they kind of start ramping. I think I suspect that the ramp of the Cybertruck will be, it's going to be smoother and quicker than the ramp of, the Model Y or the Model X or the Model S, any of these other cars. That's what I'm suspecting, just because the manufacturing, I think, with the exoskeleton is going to be simpler. That's what I understand. But Matt, what do you think about the Cybertruck? Do you think they're going to deliver What's your over-under number of the Cybertruck? Your 50/50 over-under of the Cybertruck deliveries, how many do you think they'll deliver in 2023? Over-under. The calendar year of
Um,
2023.
so I'm setting the line for calendar year 2023 Cybertruck deliveries. All right, I'll
Yeah.
set it at like 5,000.
Whoa, 5,000,
I
okay.
because I think they're not going to start producing until like Q4. And so if they
Wow,
start producing
okay.
in Q4, then
Then
maybe it's
yeah,
like
yeah, yeah.
100 the
That's
first
over-under.
week. But so if you move the time frame like 3 months, it'll have a huge impact. But I think it's unlikely that they'll get more than say 50 or 100 in Q3.
Mhm.
And so if they start in Q4, very beginning part of the S curve, yeah, like I think it's like
Mm.
tens of thousands is very unlikely in my mind.
I'll take the
Unless
over on
they
the 5,000. I'll take the
All right.
over. All right.
All
I
right.
think
Yeah,
my
we
over-under
should
would
bet
be
something. I
like
should bet you a plate of bacon on that or something.
yeah, we should, yeah. Plate of crispy bacon. Yeah, my over-under would be 20,000,
20,000?
25,000.
Okay.
25,000 my over-under, 50/50
But then I
over-under.
think I think the more interesting question is what's your over under for next year for 2024?
For
Because that's where it
Cybertruck,
really becomes more meaningful. Yeah. Like
probably 250,000.
250. Okay.
Maybe that's my over-under, in case it's a slower ramp than I'm hoping.
Okay.
If it's a faster ramp, it could be 500,000, but I think it could be a moderate ramp would be 250,000. Slow ramp would be, 150,000, 100,000 next year in
Yeah.
2024.
Yeah.
Yeah.
All right, I'll take the under.
Okay. All right. Good. Good. All right. Next question. Let's do a couple more questions. We've been dragging on the. Okay. From
All
Ed
right, yeah, we'll go
Jones.
faster.
Yeah. From Ed Jones. Question, Matt. What does MP competition look like in the U.S.?
I think that's
Mega
Megapack.
pack. Okay. Zero sum seems to say Tesla is the only U.S. player that offers 500 megawatt hour plus arrays. Accurate? Who is competitive?
Yeah, so that's definitely accurate. So Fluence is like the number 2 player in this space, and they do for the most part like 3 gigawatt hour.
Fluent, it's called.
Sorry, 3 megawatt hour. Yeah, Fluence. FLNC is
Okay.
their ticker.
Okay.
And so their arrays are a lot smaller. There's
You
a
know what?
ton.
Wait, just so you guys know, the market cap of their competitor is 3.7 billion. Just so it's tiny market cap.
Of
All right.
Fluence.
Anyway, Fluence, yeah. And so mega cap. All right. Best case, they're destroying Fluence. I mean, are they going to be a 300 billion market cap if you spun it out? No way. I mean, it'd be like if you spun out the mega cap. I don't know what that valuation would be, but
What's Fluence's sales? Like, what's the price to sales on that though? That's kind of
oh,
what
I didn't look at that. I just looked at the market cap.
this is where I think that the math actually gets interesting because their Fluence's gross margins, I'm pretty sure, are negative, and
Mhm.
their sales are pretty small relative to their market cap. They're pretty high.
Okay.
But so while you're looking that up, I'll say like GE offers some, but for the most part, as far as I can tell, it's like rebranded cells. I know there's a couple others. I want to say Samsung even did one. When I was working at the utility, we bought at least 3 different batteries from
Mhm.
Asian manufacturers. But the problem with those is you can't really wrap them into financing. And
Yeah.
so to get these financed so if it's like a $3 million project, like any company can balance sheet that, take the risk
Yeah.
themselves. It's a pilot project, which is what all these were back in 2019. But when you are talking about serious scale, like what PG&E did, or what which was it 770 megawatt hours or something like that.
Is that the Moss Landing
The Moss
project?
Landing one, yeah.
Mhm.
Like when you get to that scale, it's like you need like very proven systems
Mhm.
because like bank underwriting is really critical to getting this sort of stuff done. So yeah, and there's nobody else that offers that. I mean, the total worldwide deliveries last year, somebody put a tweet out on it, but it was something like 80. I'm not gonna quote it because I'll get it wrong. But like the scale of these in general is just really small right now. So the fact that Tesla is even quoting 500 megawatt hours and above is just crazy. So if you have a project of that scale, I think I'm
Yeah.
pretty sure Tesla's your only choice unless you're in China.
Yeah.
So
Yeah.
that's what I would say.
Yeah. I mean, I think there's a lot of demand, like tons of demand for this. But it's just a matter of can Tesla ramp it up fast enough, the whole mega packs, and can they conquer, the friction of connecting the supply to the demand. It's not like a software where you press a button and it's connected. You got to really do some logistics. You got to get these. It's more. I think it's more. It's not as easy and simple plug and play as I think maybe some people assume. I'm imagining there's lots of unknowns that we don't know about that go into it that just cause it to take time for the deal to be done. It's not just
Yeah.
signing the bottom line. That's what I'm imagining, and why it's going to
Yeah.
be a
Well,
slower ramp of revenue than people think. That's what I'm thinking.
that's what I've been trying to caution a little bit, and I've gotten into a couple of conversations or Twitter back and forth on some of this stuff. That like from contract signing to the packs actually being manufactured to the packs being deployed in the field to the site actually becoming operational, which is kind of like the very last thing for revenue recognition on at least a portion of the revenues that they're going to get from this. That's a multi-year process. So, I'm not saying that it's going to be like as Lathrop ramps, there's a 3-year delay in revenue recognition. I'm not saying that, but to your point, Emmett, this is like there's a bit of a lag from when this ramps to like when the revenue is actually going to hit. So you're definitely right on that front. But I still think it's a bigger opportunity than you.
Yeah, if it was a software thing, then it could be $100 billion market cap piece of Tesla right now, maybe. But because takes time to manufacture and put these things in place, organize the revenue, and I think that if you spun out the mega cap capability from Tesla right now as its own spin out, called it like Megapack Inc. or whatever, but it still had I think that valuation of that particular opportunity would be less than 50 billion, probably less than 20 billion at this particular point in time. But I feel like people are talking about it as if like, well, this is something new. This is like an extra 50% on top of Tesla's share price right now. It should be, I don't know. People are going to start waking up to that. I feel like there's just been so much hype around it. Overhype is what I think. I mean, I'm excited for it. Don't get me wrong, but I've seen these hype cycles many times, and it just anyway. I warn people to be cautious about the hype on some of the stuff.
Well, there's a good proxy, and I know I don't want to drag this on too much longer, but I was looking at the price to sales ratio of Fluence, which is what we were just talking about, and they're just over 1 of price to sales ratio. So let's say like price to sales of 1. Lathrop has capacity of 40 gigawatt hours a year, which at $500 per kilowatt hour is 20 billion of revenue potential. So yeah, if you were to just value Lathrop alone on a price to sales ratio of 1, then you'd say, okay, it's worth $20 billion, which is really small in the scheme of things. But where that can change is if the margins are actually a lot higher than people think, and if the growth rate is going to be, above 50% per year, which I think it will be at least for the next many years.
Yeah. But this 40 gigawatt hour capacity you're talking about, there's a lot of ifs. Yeah. Like you got to get to there, right? Are they actually producing at that level now? No, you got to get to all that stuff. It's like in the future, So what have they done up to this point? And that's the price to sales ratio of the Megapack is what I say. And then maybe you put a premium on top of that, but still it's under 20 billion, I would say for sure.
Yeah, well, I'm kind of agreeing with you. I think right now with how little we've seen, 20 billion seems about right. But my sense is, like from looking at how this is likely to ramp and the potential margins that they do have, I think it's going to scale really drastically from there. And I think when you've got, let's say, to be more conservative than a lot of people would have us be, but let's just say 25% gross margins on that. Well, all of a sudden you can't do a price to sales ratio of 1 when you've got 25% gross margin. So like the multiples can expand really quickly if you've got the combination of higher margins than people expect and higher growth rate going forward than people expect. So you could be 20 billion today, but maybe a year from now, when some of this stuff is proven, we might say, oh, you know what? Actually, this is worth like
50 billion or 100 billion. Yeah, I could see that too. Yeah, but let's see. Yeah, it's just, I think people are a little overexcited right now on it. I'm excited for it, but I'm just trying to temper people's expectations that the stock is going to be suddenly, revalued because of this mega pack first deliveries or something.
I don't think it adds like $300 per share or anything like that. Like I've seen a couple of people kind of commenting on it. So caution is warranted for sure.
Yeah. All right, we've gone a long time. Last question over now. We usually don't go more than an hour really. So let's do one more question. From T Nelly on YouTube. Can Tesla fully ramp Cybertruck if they haven't fully ramped 4680s? Do they have a contingency plan using 2170s? And can they get enough from outside suppliers? I'll take a quick stab at this first. And my inclination is the 4680s are ramping on schedule in time for the Cybertruck to start ramping. I think the 4680s are ramping ahead of schedule if needed, just for the Cybertruck ramp. That's my thought. We've seen the production rate. I forget the actual numbers, but I've been relatively pleased with the recent 6 months milestones they've achieved with these 4680 ramps at the Lathrop facility, and I think they're putting it in place at Austin as well, and then maybe they'll do the 4680 ramps in Shanghai and Berlin. Who knows? I think it's supposed to be in Berlin later at some point. So I don't think this is going to be a problem ramping to 4680s in time for the Cybertruck to start ramping end of this year. That's my thought. Matt, do you have any thoughts?
Yeah, I agree with that. I think the question, like, imagine just a hypothetical where they can't fully ramp the 4680s. Can they solve that? And I think the answer is no. Like, I think they need the 4680s for the Cybertruck. I don't think
Really?
they
Are
want
you
to
sure about that?
redesign
I'm not.
No, I'm not.
Is
I'm not.
I'm not sure
So,
about that either. Like, this is an assumption. Like, I'm not even sure the Cybertruck is necessary. Like, the 4680s are a requirement to be part of the Cybertruck. I'm not even sure if that's the case. But if that was the case, I think they're okay. But Matt, go
yeah.
on.
Well, I mean, that's a fair point because, like, the Model Y we know is capable of being used with 4680s and without, right? So,
Hmm.
I guess it's certainly possible that the Cybertruck could be done the same way. But my sense is they'd rather like they'd clearly much rather have the 4680s, ramped and figured out, so you don't have two different versions of the Cybertruck. So I'm not certain the answer on this, but I do kind of tend to agree with you. We've got roughly a year from right now, maybe call it 10 months until Cybertrucks are going to start being manufactured. And that's a lot of time for the 4680 ramp to really get in gear. So I'm hopeful that they can make real good progress, and that won't be a bottleneck as they're ramping Cybertruck.
Yeah. First Cybertruck's gonna be super exciting. I heard the interview with Franz with Ryan McCaffrey this past weekend released, talking a lot about the Cybertruck. Seems like there's some cool little features that haven't been disclosed that will be coming. That we will find out about soon when Cybertrucks are produced. So yeah, it seems exciting. Cybertruck is Cybertruck, or the release of the Cybertruck into the wild, when there's like 10,000 plus units, all over the Midwest and Texas and all over the Northeast even. I think that'll be a conversation starter enough to help advertise Tesla through word of mouth, regenerate, re-energize it, to a larger degree. People look at it and be like, what's that? And other people, oh, I know about Tesla. I'll tell you about it, So I think just the Cybertruck will be as good as, it'll create a viral word of mouth marketing for Tesla. But we might need some traditional advertising before that, is what I'm thinking. So,
Yeah.
but to meet the production increase of the Model Y and the Model 3 in the US, so, and around the world. All right, guys. Well, that's it. Anything else you want to chat about, Matt? Or what's the difference between a snowman and a snow girl?
Uh-oh. No, you caught me out of left field with that one. I'm not sure. What is it?
Snowballs.
Gosh. Your dad jokes are always on the dirty side.
Yeah, I don't know where I get them from. You got to have something for something kids can kind of be like, oh, that's funny, haha. But grown-ups could be like, oh, I get it, funny. So, all right, we'll leave it at that, and next week we'll be on and we'll do Matt's model preview of Tesla earnings on the 25th. I don't see much excitement going into the earnings yet. I don't see many people talking about it yet. It's kind of, I think that's nice. Maybe the stock will creep up going into the earnings because there's no excitement and it'll start drumming up soon.
Yeah, well, I think to me it kind of makes sense. I've been doing the modeling, and we'll get into this next week. But even if, like, let's just assume it is a blowout quarter. Um,
Yeah.
it almost doesn't matter what numbers they post in Q4 because all the attention is, okay, what's going to happen in Q1 and beyond with these price
The
cuts.
margins. Yeah.
Yeah, so like if they post $1.50 in earnings per share, which I don't think they will, but that would like blow out Wall Street expectations. The stock could still fall if they are really cautious on their outlook. So to me, it's the results. We were looking forward to this as a catalyst with how strong Q4 was going to be, and for a long time. And I think it's just unfortunately the macro situation has started taking over all considerations elsewhere. So yeah, I think you're right that expectations are lower, but
yeah,
I think
guidance
outlook's
will
gonna
be
be the most
key.
important thing.
You think they'll do any? We'll speculate if they do more guidance than 50% year over year on average for years to come. That's kind of a very bland, boring guidance. Maybe they'll be more specific. So
Yeah, I hope so.
yeah. All right, guys. Well, until next week, have a great week, and we'll be here same time, same place next week. All right. Bye.
Thanks, everyone.